Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong Advisory and the advertisers heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Chuck Zodda and Paul Lane. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. This is the Financial Exchange with Chuck Zodda and Paul Lane.
Chuck, Paul, and Tucker with you here, and happy Fed Day, everyone. Specifically, happy Kevin Warsh Fed Day. It is Kevin Warsh's first day on the job, and we're going to see exactly what kind of the first glimpses of the Warsh Fed look like this afternoon. The Fed's interest rate decision is scheduled to be released at 2 p.m. this afternoon. We are also scheduled to receive the summary of economic projections, and there is going to be a Kevin Warsh press conference at 2:30 p.m. The biggest question out there in my mind is, what color is Kevin Warsh's tie going to be? Jay Powell, the master of the purple tie, has been relegated to just another board seat on the Fed, and I'm guessing there has to be a prediction market out there somewhere for what color is Kevin Warsh's tie going to be. Having not looked for it or seen anything about it, I'm gonna go with Warsh as a gold guy.
So there is no prediction market
There's
on
not?
it just yet, but perhaps an endeavor for the Financial Exchange to pursue
Paul,
is get that off the ground.
What color do you have?
I'm going to go with
Warsh's
red.
tie? You're going red?
Yes.
Tuck, what about you?
No tie.
No tie.
Cash.
Oh,
Kev.
wow.
Are you also going with no shirt in addition to no
you
tie?
got a shirt. I mean, what are we doing?
Sleeves or no sleeves?
Sleeves.
Jacket or no jacket?
Jacket.
Okay, so just a little bit more casual is what you're suggesting there. So, in reality, the big questions that I have when it relates to this meeting. Number one, the Fed is not going to cut interest rates at this meeting.
Correct.
We know this with almost 100% certainty. You can never be 100% certain of anything, but if
99.6 on the Fed futures market, CME.
given what we heard from the rest of the committee that is still there, including Jay Powell at the last meeting, it is. I would be shocked. I would be flabbergasted. I would eat my own shirt.
Oh, gosh.
Tomorrow.
I thought it was going to be in a different word.
No, I would eat my own shirt tomorrow if the Fed cut interest rates at this meeting.
All right.
I don't think they will.
Stay tuned.
But I don't think that's coming. Here are the things I'm interested in. Number one, is there any change to the format of the statement that comes out after the Fed meeting?
Mm-hmm.
Generally, right now, it's like 4 to 5 paragraphs long. It goes through blah, blah, blah. Does Warsh take an opportunity? One of the things he's wanted to review is the communication policy of the Fed. So is there a change just in the overall formatting of the statement and what they say there? I think that'll be something
He wants
interesting to
less
watch.
communication, just for listeners out there, than
Yes.
what has been previously done by the Fed.
Number two, we are going to get a summary of economic projections today. Does Warsh take this as an opportunity to say, hey, we're halting the summary of economic projections after this meeting? They're not required to put it out. It's not a statute of the Fed. It's not a law passed by Congress. And so does Warsh say, hey, we're not going to do the summary of economic projections again? Number three, press conference. Again, the Fed is not obligated to send the chair out for the press conference every meeting. Does Warsh, A, cut this one, pretty short and not really say too much? And B, does he make any formal changes to the schedule of press conferences going forward. I think these are the big things I'm looking for right now, rather than, hey, is he going to talk dovishly or talk hawkishly? Because I think that all of that stuff is going to end up being resolved by where the economy goes. You know, if Warsh talks hawkishly today, just as an example, and we see oil prices continue to slide through the rest of the summer and inflation, abates, it's not going to matter that he talked hawkishly today, because the path forward will be, okay, we don't need to worry about inflation as much and we can move on from there. If he talks dovishly today and things in the Middle East flare up again and oil prices, rebound in the second half of the summer and inflation becomes a bigger problem, it's not going to matter that he talked dovishly today. So I'm not really too concerned about, the specifics of what he says about the economy right now, because ultimately where the economy goes over the next 6 to 12 months is going to lead the Fed. What I do think the best practice for him would be at this point, even given that he likely wants to cut interest rates if his public statements previous to this are any indication, the best practice for him is still to say, hey, the economy right now is showing signs of elevated inflation. We're going to monitor that to see if it becomes a continued problem, and if it does, we'll look to address that. If it is not a continued problem, then we will seek out appropriate policy as we see fit, and yada yada. That would be the best thing for him to say. And look, here's the thing. When you become the Fed chair, it's not by accident. There are plenty of talented economists out there. It's like becoming the CEO of a major company. You don't get there just by being good at your job. You get there by knowing how to play the game. Kevin Warsh is no dummy. He, again, has been on the Fed board before, and he knows how to play the game to get to where he wants to be, which is the Fed chair right now. I don't expect him to walk into the first Fed meeting, rip his shirt off, and go, y'all are cutting rates. He's not going to do that, because he's no dummy, and he also knows all these people, from his time at the Fed anyway. It's not, again, he's not walking into the committee meeting going, hi, I'm Kevin. You are. Oh, so nice to meet you, Jerome. Yes. No, these people all know each other. And so I think that by and large, while Warsh has talked about wanting to change, how the Fed operates a little bit, I don't think he's going to be stupid about it. Or at least I hope he isn't. I don't think that's where he's going to go, in my opinion.
Yeah, ultimately, you have to convince all the other members on the board to go in the direction that you're trending. So you have to establish credibility here with your first time coming through. So the idea of making dramatic changes to the way he runs things on his first meeting, you probably would think would not be a great approach to get your other board members on the same page with you going forward. So really, like you said, what it does come down to is, how is the communication style going to change? Really, what the Fed has done previously with these quarterly projections and the release of the dot plot, as well as these press conferences, all of this is aimed at keeping investors and any market participants apprised of what the Fed is thinking, so as not to create a scenario where any interest rate decision comes as a surprise to the markets. It allows for people who are behind the scenes, that are really critical to the interest rates policy in this country and markets, to understand where the direction of rates are going. Kevin Warsh has said that he feels that there's too much communication in the current iteration of the Fed, and that there needs to be tweaks to allow for greater flexibility for the Fed by basically them saying less. And so that's, I'm kind of piggybacking off your point, but that's what I'm looking for today, is how does he make that distinction in his overall sort of thought process behind lesser communication? How does that take shape or form today?
You guys big Forgetting Sarah Marshall fans?
Sure.
Yes.
Yeah. It's a solid rom-com from 2008, I believe.
Somewhere in that range, yeah.
You guys remember Paul Rudd's character in that?
Of course.
Kunu?
Oh, yeah.
Do less.
I knew you were going to go there.
Do less.
Pop up.
No, do less. No, now you're not doing anything. That is Kevin Warsh, what he's trying to do. He wants to just be, he wants the Fed to bob in the waters of monetary policy. That's what he wants them to do. And by the way, most of the time, the answer for the Fed is that they don't need to do anything.
Right.
Like, they don't need to overreact to every ripple in the economy, because you go through these periods where, hey, the economy looks like it's slowing a little bit for 4 to 6 months, and then it looks like it's accelerating, and then it looks like it's a living system. It doesn't just go at one speed. It's not cruise control. It's, no, like, this changed, and so companies decided to do this, and then that caused other changes, which made them go back. Like, that's kind of how things move. So I do think there's something to be said. We've talked a lot about this. Guys, I don't need 11 Fed speakers in a week.
No, I've never understood the need for them to all go on their press junkets to have all of their thoughts voiced out.
But I do need to know, if you're not talking, that you're looking at this stuff, you're paying attention, and when it is time to react, when it's not one of those little wiggles, but instead it's a larger wobble that needs to be dealt with, that you're on the case and you're ready to go. And that's what Warsh is going to need to convince people of is, hey, I'm not going to be holding your hand talking about everything 24/7, but I'm here if you need me. You can count on me, just like
you can count on
just like the Michelin Man or Smokey the Bear or any other anthropomorphic character that you can count on. That's what I want Kevin Warsh to be.
Pillars of our society.
You know,
Smokey the Bear.
Exactly.
Michelin Man.
You know, only you can stop inflation. That's if Smokey was Fed chair. Let's take a quick break here. When we return, let's talk a little bit about oil and the Middle East.
The Financial Exchange streams live on YouTube. Subscribe to our page and stay up to date on breaking business news all morning long. This is the Financial Exchange Radio Network. Estate planning isn't just about writing a will. The right trust can help your family avoid probate, protect your home, reduce estate taxes, and even help shield assets from the cost of long-term care. That's why Cushing & Dolan created a new guide called Demystifying the Top 8 Estate Planning Trusts. Inside, you'll learn the difference between revocable and irrevocable trusts, why some trusts are designed to protect assets from a nursing home, and how certain trusts can keep your family's affairs private. The guide also explains some of the biggest mistakes families make, including creating trusts but never properly funding them. If you've been putting off estate planning, this guide is a great place to start. Call Cushing & Dolan today at 866-848-5699 to get your free copy. That's 866-848-5699, or request it online at legalexchangeshow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Hi, this is Chuck from the Armstrong Advisory Group. Our new guide, Understanding RMDs, explains why required minimum distributions are about more than just withdrawing money from a retirement account. The rules can get complicated fast. An inherited IRA opens up an entirely new set of deadlines with rules to follow, and mistakes can be costly. The IRS can impose a penalty of up to 25% of the amount that should have been distributed. But there also may be opportunities to plan ahead. The guide covers strategies like qualified charitable distributions, reinvesting RMDs, and ways to help manage future tax exposure. To request your free copy, call us today at 800-393-4001. That's 800-393-4001, or request the guide at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
In a heartbeat, you could be the difference.
Mark collapsed from cardiac arrest.
9 out of 10 people who suffer cardiac arrest outside the hospital don't survive.
It took 30 minutes of chest compressions to finally feel a pulse.
Most of the time, it's because no one nearby performs CPR. But together, we can change that. Extraordinary things happen when people take action. A small step, a simple skill, a life-saving moment. HeartWalk brings communities together to create health and hope for every heartbeat. Every walker who joins HeartWalk, every dollar donated, means more people trained in CPR, more research, and more life-saving moments for everyone. Take the first step and register for your local HeartWalk. Extraordinary starts with you. Join HeartWalk today. Find your local HeartWalk at heartwalk.org.
Let's talk LDL, aka bad cholesterol. The higher your LDL cholesterol, the higher your risk of a heart attack or stroke. Your health matters. Know your number. Talk to your doctor and get your cholesterol checked. And learn how to help lower your LDL bad cholesterol. Because your health is in your hands. Find out more at heart.org/LDL.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
Daily financial content in your feed when you want it. Follow the Financial Exchange on Instagram. This is the Financial Exchange.
Be sure to subscribe now to our YouTube page where you'll find daily shows of the Financial Exchange. You'll get caught up on anything and everything you might have missed right here on the Financial Exchange Radio Network. Just search the Financial Exchange on YouTube and hit that subscribe button.
All right, let's talk a little bit about the oil outlook beyond 2026. When we take a look at 2027 and 28, the IEA, the International Energy Association, or association, I don't know, whatever the A stands for. The IEA is out.
Agency, it's fine.
The IEA is out and with their estimates of what 2027 looks like. And the big thing, they are expecting to see, after a 1.1 million barrel per day drop in demand this year, a 2 million barrel rise, so net of 1 million over 2025. And oil supplies expected to rebound by about 8 million barrels a day on average, again, because we've had this large disruption this year. And this gets at something that I've been talking about, but I still don't think the IEA is quite there on it. In that, look, if you're concerned about the potential for higher oil prices at some point later this summer, which I'll admit, I still am. I know that we're not seeing higher prices right now; they're very much lower. There's a pretty narrow window for those higher prices to materialize, which is kind of late summer through the end of this year, because as you get into 2027, a few things happen. Number one, you've got all kinds of countries in the Middle East talking about or already building pipelines to bypass the Strait of Hormuz.
Sure.
So some of that production is going to come back online anyways. Number two, other production around the world, if prices do remain higher for longer or get back to being higher for longer, other producers say, hey, we can spool up to fill that demand as well, knowing that this isn't just a short-term thing. Yeah, we're happy to, start producing more then. And so I do think that the IEA gets at the idea that, look, if there's going to be any kind of supply crunch, it's going to be in Q3 and Q4 of this year, because the factors that lead to it start to be resolved next year, even if traffic doesn't resume in Hormuz, as was previously. The piece that I do think that they are missing is the fact that, and again, it's the IEA, so they're not dummies. I know this, but the IEA has underestimated demand for the last 25 years. Basically, they consistently underestimate demand. The place that I think that they're going to underestimate it is in countries that either need to refill their strategic reserves or countries that don't have them right now, looking to build those strategic reserves. And so this is why I've said, look, even if you get a resolution and everything starts moving cleanly, you're not going back to $55 oil anytime soon, because there is going to be sustained demand for a 3 to 5 year period to build those reserves back up. And is there going to be enough upswing in production to offset that? I don't think so. And so this is the place that I get to, which is, hey, great, you've got, the memorandum of understanding signed and final signing ceremony is going to be on Friday. we should start to see ships, moving through Hormuz in higher levels shortly after that is the expectation. And if you get that, yeah, you can potentially stave off some of these worst case scenarios if Hormuz had remained closed through, mid-July or August or longer. But it still is something where the longer term picture is not one where you get oil back to 55 a barrel, because there are factors that are going to lead to higher demand in the next several years relative to what it was before.
Yeah, I feel like it's kind of a tightrope that you're walking to hit all of these different checkpoints appropriately. You've got infrastructure in the Middle East that has been destroyed that will need to be rebuilt. You have perhaps, this significant investment in building pipelines to work around the strait. Like, all of these things. And then this agreement is supposed to be signed on Friday. How quickly does traffic resume? And then to your earlier point, the real demand to, replenish strategic reserves. There just feels like there's going to be a significant amount of demand factors that could far outpace what the supply or even increased supply could look like in 2027. Like, a lot has to go right, I feel, in order to have this sort of smooth landing of sorts in 27 where there is enough supply to meet the demand factors. Like, I think
you get there. I'm less concerned about 27. Yeah. It's really the period that I still think bears watching is as you get into kind of mid-July through mid-September is the peak time for a potential crisis to hit. And after that, I'm hard-pressed to see any problems really continuing, unless Hormuz somehow remains closed throughout all of this, and then all bets are off.
Which can't be ruled out to some.
No, it's
some
the Middle
extent.
East. You can never rule anything out.
Right.
It's again, you never know exactly how this is going to play out. But again, the only reason I'm hesitant, there's been so many false starts on this.
Right.
This feels more real than previous things over the last couple months. But you never know. I mean, even I look
we
at
still have a long way to go for Friday.
I even look at and again, there's various versions. Like Bloomberg has a version of the memorandum that's out there. It's like, okay, Iran commits to restoring traffic, within a 30-day period. And part of it, what goes through my head, just because, again, I've seen how the Iranians have operated this whole time with their definitions of open and what if they wait until day 29 and so now we're sitting here, it's mid-July, and then they're finally okay, now it's open, but it's been another 4 weeks at that point, and they haven't done anything yet.
Not to mention all the logistical issues that are going to come through going through that strait now, where there's mines that I think have to be taken out, there's scheduling, there's insurance coverage. There's a lot of different issues that need to be sorted out to make that traffic resume seamlessly in the strait.
So we'll see. Again, I'm optimistic that we can avert these worst case scenarios, but this whole saga's had so many different twists and turns over the last couple of months that until it's, you see consistent flow for a few days with no problems, it's let's just see how things progress here. But I'm hopeful we can avert some of the worst case scenarios that we were talking about, and we'll see where things go. Let's take a quick break here. When we return, Todd Lutzke Todd Lutzke does not join us.
No, he is. Ask Todd.
It's not on the calendar.
My bad.
Todd Lutzke does
He's
join
up
us
next.
for Ask Todd next.
Like us on Facebook and follow us on Twitter @TFE Show. Breaking business news is always first, right here on the Financial Exchange Radio Network. Without the right estate plan, your family could face unnecessary costs in the future. The right trust may help your loved ones avoid probate and better protect family assets. Get Cushing & Dolan's new guide called Demystifying the Top 8 Estate Planning Trusts by calling 866-848-5699. That's 866-848-5699. Or request it online at LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts has helped me and countless others adjust to civilian life through a variety of incredible programs. Through our local Veterans Assistance Program, we provide necessary services to veterans and their communities, such as food shopping, landscaping, and companionship, but we need your support. You can help by making a donation today. please visit dav5k.boston. That's dav5k.boston.
9 out of 10 people who suffer cardiac arrest outside the hospital don't survive. Most of the time, it's because no one nearby performs CPR. Every walker who joins HeartWalk means more people trained in CPR, more research, and more life-saving moments for everyone. Take the first step and register for your local HeartWalk. Extraordinary starts with you. Find your local HeartWalk at heartwalk.org.
Hi, this is Mike Armstrong from the Armstrong Advisory Group. One missed retirement deadline could cost you thousands of dollars. Our new guide, Understanding RMDs, breaks down the rules for required minimum distributions, including when you have to take them and what can happen if you get it wrong. This isn't just about taking money out of an account. Your RMDs may affect your tax bracket, the taxation of your Social Security, and even whether you pay higher Medicare premiums. This guide also covers common mistakes people make, like forgetting about old retirement accounts and mishandling inherited IRAs. If you have money in a retirement account, this is information you need to know. Call us right now at 800-393-4001 to get your free copy of Understanding RMDs. That's 800-393-4001 or request the guide online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Our Senators Edward Markey and Elizabeth Warren and Representative Ayanna Pressley are standing up for radio listeners like us by supporting legislation to keep AM radio in cars. They know the value of local radio in times of emergency. Now it's time for Congress to finish the job and pass the AM Radio for Every Vehicle Act. Learn more at dependonam.com. This message furnished by the National Association of Broadcasters and this station.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke from the law firm of Cushing & Dolan with your Financial Exchange Quick Tip of the Day. And today we're talking about your new guide, Todd, Demystifying the Top 7 Estate Planning Trusts. If there are younger families out there, should they consider having a trust in place, and what type?
Most people don't think about it when you're young, but if you're a young family, meaning you've got minor children, you might not have a ton of assets yet, but you want to make sure that what you do have is protected for your children. You could probably use a revocable trust. I don't think you need an irrevocable trust, but a revocable trust. You put your assets in. Again, they're going to avoid probate. Again, it may or may not be a big estate tax issue at the moment, but whatever you have, your children can't own, right? They are minors. So you don't necessarily want to leave your assets to a guardian and have the guardian deal with everything when you can design a trust to hold the assets and ensure how and when and where and why they get these assets. Just pick the right trustee, put the language you need in the trust to control it for those children, and the trust will accomplish that task. So just because you're young, folks, doesn't mean you shouldn't think about your estate planning. Sometimes it's not all about the money and the probate and the taxes, but more so about the family behind the estate plan.
The estate planning experts at Cushing & Dolan have been helping families like yours for more than 30 years, and they have written a brand new guide called Demystifying the Top 7 Estate Planning Trusts. Call right now for your free copy, 866-848-5699. That's 866-848-5699. Or you can request it from their website, legalexchangeshow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. Time now for Wall Street Watch, tracking the stocks, the data, and the headlines driving markets so far today, right here on the Financial Exchange Radio Network.
Fed Day is here and markets are up modestly as investors await the conclusion to Kevin Warsh's first Fed meeting as chair at 2 o'clock this afternoon. Right now, the Dow is up 0.4%, S&P 500 edging 6 points higher, NASDAQ up only 21 points. Russell 2000 is up nearly 1%. 10-year Treasury yield is flat at 4.43%, and oil up over 1.5% higher, trading at $77 a barrel. After 3 straight sessions of positive gains since its IPO, SpaceX down nearly 3% today. Sticking with space, where AST SpaceMobile said it successfully launched into orbit 3 new satellites that will continue to build its cellular broadband network in space. That stock up over 3.5%. Meanwhile, CarMax dropping 6% despite the car retailer posting an earnings and revenue beat. Elsewhere, Yum Brands officially agreed to sell its Pizza Hut business for $2.7 billion in 2 separate deals to Long Range Capital and Yum China Holdings. Yum Brands down by 1%, and shares in Lionsgate Studios retreating 6% after streaming giant Netflix denied reports that it is interested in acquiring the media company. Lionsgate rallied by 14% yesterday amid the speculation. I'm Tucker Silva, and that is Wall Street Watch.
This is Ask Todd on the Financial Exchange Radio Network. If you have an existing estate plan or are in the market for one, Todd Lutzke is here to answer your questions and help you plan for later life. Ask Todd is presented by Cushing & Dolan, serving Massachusetts and New England for more than 35 years, helping families with estate and tax planning, Medicaid planning, and probate law. Visit CushingDolan.com. Now, here's Todd Lutzke.
As promised, we are now joined by Todd Lutzke from the law firm of Cushing and Dolan. Segment's called Ask Todd, and this is your chance to ask Todd your estate planning questions live on air right now. 888-205-2263 is the number to call. Again, 888-205-2263. We've got the phone lines open. But remember, we usually get through maybe 2 to 3 of your questions, so get calling early and often to make sure we get to your estate planning question. Again, that phone number is 888-205-2263. Mr. Lutzke, how are you doing today?
I'm never better. How you doing?
I'm doing pretty well.
It's always something.
Pretty well. I was reading about Isaac Newton the other day.
I've heard of him. He's with the Apple.
Well, I was reading about when he discovered gravity.
Yeah.
You know what he said when he discovered it?
No.
He said, it's about to go down.
Yeah, that's true. Yeah, it's about to go down.
It did. Let me tell you.
It did.
Todd, I want to talk a little bit about trusts and specifically, key differences that help to inform people as to the right trust for them, because there are a number of different instruments out there, correct? It's not just like, hey, here's your trust.
Right.
When someone is trying to make an informed decision, what are the considerations they need to have in their mind that help to clarify which one of the tools is going to be the right one for their specific situation?
Yeah, I think that's a fair question, because, they'll be sitting perhaps with an attorney and, the attorney's supposed to provide some guidance and some consultation as to how to go about it. And they will ask a lot of questions, so I don't want you to feel like if you're trying to get started in the estate planning world that you should fear going in there, because the lawyer should provide a lot of guidance, ask a lot of questions about your situation, which will help guide you. But in your mind, sort of go in with these ideas in mind. Do you want to avoid probate? You're going to be thinking about that as an option. Okay, because that's going to make sure these items come up in your meeting, and if they don't, you bring them up in the meeting. That's kind of where I'm going with this.
Sure.
So, you should be thinking about probate. You should be thinking about how you own your assets. Is it joint? Do I have it in an existing trust already? Do I have designated beneficiaries on it? How is it owned? In my own name. Then, roughly, what are they worth? Approximate, round numbers. We don't need, just a good guess as to what they're worth. And so think about what these assets are. So when you go in, you're going to be prepared to answer these questions. I got a house. I got a vacation home. I have a rental. I have a 401k, an IRA. I have life insurance. What's the death benefit? I have an investment portfolio. Folks, these all are the kinds of assets that most people have. Understand what they're worth, because it's that number that's going to help the lawyer decide what kind of trust is right for you. So when you add up that list of assets, if it exceeds $2 million, now we're in the Massachusetts estate tax world. If it exceeds $4 million, we're starting to get out of the Massachusetts estate tax world because it's getting higher and higher, and if it's, above the 15 million, we need to know that. So that's going to make a difference. And of course your age is good. And so I think, and then a little bit about your family dynamics is good too. Remember, we're going to be asking, does everybody get along? And if they do, great. And then, think about how do you want to leave things to your family? They're going to be asking you questions. The lawyer's going to be saying things like, do you want them to have it outright? Are you concerned about losing assets to a future divorce? Now, this is not for the mom and dads. This is for your kids, right? You're dead and 10 years later, they get a divorce. Well, if you left them assets outright, oh yeah, they're good, they're healthy, they're smart kids, we can leave it to them. Yeah, all that might be yes, but the divorce still happens even though they're good, well-mannered kids. And so I don't want it. So I want to hold it in trust to protect it from them. Generation skipping benefits, getting it down a generation without paying taxes. These are some of the things to think about, and that will help the lawyer then pick the trust that's right for you, whether it's revocable, irrevocable, gifting trusts, depending on how much you're worth. So that's a mouthful.
Talking with Todd Lutzke from the law firm of Cushing & Dolan. Phone lines open for you to ask Todd your estate planning questions. Again, it's why we call the segment Ask Todd. 888-205-2263 is the number. And again, still got a little bit of room there, so make sure you get your calls in so that you can ask Todd your estate planning questions live on air right now. 888-205-2263. Again, that number is 888-205-2263. We're going to take a quick break right now, but when we return, we're going to get to your calls with Todd. Again, that phone number is 888-205-2263.
Ask Todd with Todd Lutzke every Wednesday at 10:30, only here on the Financial Exchange Radio Network.
This is Susan Powers from the Armstrong Advisory Group. When it comes to Social Security and Medicare, the decisions you make today can have a lasting impact on your retirement. There are key choices to consider, like when to claim, how spousal and survivor options work, and whether your Medicare coverage is aligned with your needs. Without a clear strategy, it's easy to overlook how taxes, income, and healthcare costs all connect. Join us for a complimentary educational seminar on Thursday, June 25th at 5 p.m. at the Marriott in Quincy. We'll help you understand your options and the decisions that come with them. That's Thursday, June 25th at 5 p.m. at the Marriott in Quincy. Reserve your seat today by calling 800-393-4001. That's 800-393-4001 or register online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Without the right estate plan, your family could face unnecessary costs in the future. The right trust may help your loved ones avoid probate and better protect family assets. Get Cushing & Dolan's new guide called Demystifying the Top 8 Estate Planning Trusts by calling 866-848-5699. That's 866-848-5699 or request it online at LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. For veterans, every day is a commitment to service. This Veterans Day weekend, be part of something meaningful at the DAV 5K Boston. Join the thousands of runners and walkers at Fort Independence on Castle Island for a day of community, remembrance, and gratitude. Proceeds help fund the programs and services provided by the Disabled American Veterans Department of Massachusetts. To register or make a donation, please visit dav5k.boston. That's dav5k.boston.
Sometimes we know what's next. Other times, it's impossible to know. Life can change in an instant. Don't be caught standing by the next time someone's heart stops. Knowing CPR gives you the ability to act and takes you from bystander to lifesaver. CPR is a life-saving skill. Join the nation of lifesavers today by learning CPR at heart.org/nation. National support for CPR education provided by Elevance Health Foundation.
As a busy mom to 4 kids, my to-do list is full.
Trying to fit in exercise, eating right, and prioritizing self-care can feel next to impossible.
While we can't add more hours to the day, we do have a great resource to help.
Go Red for Women has easy tips, tools, and information to help you and your family live a healthier life.
So to all the moms, the aunts, grandmothers, and amazing women out there doing it all,
visit goredforwomen.org/momlife today.
You take care of them, Go Red for Women will take care of you.
When a heart stops, the clock starts. You are the first responder until help arrives. In that moment, 4 minutes equals brain damage. 6 minutes equals too late in an emergency. The first responder is you. We need you. Will you be ready? Learn CPR. Visit heart.org/nation. That's heart.org/nation.
Is it a stroke? Even if you're not sure, act fast and call 911. Signs can include face drooping on one side, arm weakness, speech difficulty, or not making sense when talking. Time is critical. A stroke requires immediate medical care, which starts as soon as the ambulance arrives. So if you see any sign of stroke, act fast and call 911. Visit mass.gov/stroke, sponsored by the Massachusetts Department of Public Health.
You're listening to Ask Todd with Todd Lutzke on the Financial Exchange Radio Network.
Alrighty, let's get right to your questions with Todd Lutzke. First in the queue for Todd, we've got Jay in Nashua. Jay, what's your question for Todd?
Hi, Todd. Thanks for listening to me. I don't usually call, but a financial background, CPA. We have a family trust set up. There's obviously my mom and dad, who's 1% each GPs. Me and my brothers have LP interest. My father has passed, and his, say, 20% is in his trust set up. And my mom's trust will be set up, obviously, when she passes. Do me and my brothers get a step up in basis on the percentage ownership of the general partners, my parents?
So this is very, very, I'm trying to understand the setup. So first of all, trusts exist before parents die. They don't, they do exist during life, and then they continue to exist when one dies. So do your parents have a joint family revocable trust, or does your dad have a separate trust and your mom have a separate trust?
One trust overall. That's why my dad's trust was created on his assets. My mom's is still revocable.
No. So there's a joint family trust, or there's one trust for dad, one trust for mom. That's what I'm trying to understand.
Separate.
There's two separate trusts. Okay, so we'll call it the dad trust and the mom trust. Okay, so does whatever's in dad's trust, if it was revocable when he died, whatever's owned by dad's trust when he died gets a step up in basis. Okay, so if you've got a separate family limited partnership, which it sounds like you do, which is, again, separate from the family trust, I'm guessing that the limited partnership units of the family limited partnership are owned by dad's family trust, correct? His 20%, correct?
Yes, but my mom was also a 20% owner.
Right, but your mom's alive, so that doesn't matter, right?
Yes.
Your mom's 20%. Yes. Your mom's 20% are in her trust, so that's a separate issue. So the 20% that's in your dad's trust, that would get a step up in basis. Now, again, you're going to have to worry about a 754 election and making an inside basis, outside basis election, but that's way too complicated for radio. But it will get a step up in basis. The 1% that I'm guessing you and your siblings, is that right? Is it you and your siblings, or just you? Okay. So you and your siblings, if you guys own 1% as a general partner, that simply means that you control the partnership and you own 1%. So dad's dying has zero impact on basis for your 1% because he didn't own it, right? You owned it. So, no, I don't think you get a step up in basis on the 1% that you own because no one died. So hope that helps out and get you where you need to go. And it sounds like at least you've got some good planning in place for your folks. So, always good to hear that that's being done. Folks, that's just one kind of trust that was done here. And so Jay was, getting that done for his family, which was the revocable variety. This guide offers you the top 8 estate planning trusts, from nominee realty trusts, which may not even be trusts, all the way to the regular revocable trust, irrevocable trust for Medicaid, then the gifting or irrevocable life insurance trusts. They're very different. Pooled trusts, special needs trust for your kids. And folks, not just a top 8 list. It actually explains how to fund them. It explains how they operate during life, what you can and cannot do. It explains the income tax and the estate tax benefits and how it operates when you die, which is what's going on here with Jay. So, folks, not just a top 8 list, but it will really help you get your estate plan off the ground and pick which trust is right for you. 866-848-5699 or legalexchangeshow.com. Again, 866-848-5699 or legalexchangeshow.com.
Todd, I got another one queued up for you here. Let's go to Nancy in Haverhill. Nancy, you are on with Todd Lutzke.
Thank you. Hello.
Hello.
My question is, I have my house in an irrevocable trust, and it's been past 5 years.
Okay.
I'm wondering, is it too late if I wanted to move into buy a different house, a ranch home? Will I have to go back 5? Can I do that now that it's irrevocable? And is there a penalty I have to pay extra?
Yeah, so this is great. I think indirectly you're saying, Todd, can I sell it? I just want to rephrase the question for everybody. Can I sell it, number one? 2, can I buy another house? Because it sounds like you want to buy this ranch house, which is great. And Todd, is there going to be a bad tax when I pay it? And is there any penalty for that 5-year rule? Is that going to be affected by doing this? Now, I'm only going to answer the question as if it was an irrevocable trust that Cushing and Dolan prepared, that we prepare, because I know how that works. I, unfortunately, without reading your trust, don't know, but I'm going to assume it should be drafted similarly. When I say drafted similarly, I mean, first of all, it should be a grantor trust for income tax purposes. So let's run through the example. First, can you sell it? Yes. The trust sells it. The deed goes out of the trust for your old home to the buyer, and the buyer cuts a check paid to the order of the trustee of the trust, and you deposit it in a bank account in the name of the trust. So if you don't have a bank account, go get one, open it up in the name of the trust, and get a tax ID number for the trust in case you don't already have one. Now you deposit the money. Now you can take that money and go buy this new ranch house that you want to buy. And so the trustee of the trust would then write a check from the trust to the seller, and in exchange, the seller would prepare a deed transferring the property into the name of the irrevocable trust. So at the end of the day, there's your completed transaction of you selling and buying a new house. Now what? Well, do we have tax ramifications on this, Todd? No. If it's a grantor trust for income tax purposes, that means you're treated as the owner for income tax purposes. So if it's your primary residence, which I'm guessing it was, and if you were married, you would get a $500,000 capital gains exclusion. If, on the other hand, you are single, as long as you've owned and used it, and owning it by the trust is okay, as your primary residence, you get a $250,000 capital gains exclusion. So what does that mean in English? If you sell the property for $1 million and you only paid $500,000 for it plus improvements, then the gain is $500,000. If you are married, you get $500,000 off the gain, which would eliminate the tax. If you're single, you only get the $250 off the gain, so you'd have to pay tax on the $250. My point is that there's no adverse consequences to selling it from this trust. You pay the same tax, no more, no less than you would before. So very important that you go to your lawyer and make sure it's a grantor trust so as not to have any adverse income tax consequences on the sale. And lastly, what happens to that 5-year rule? Todd, you told me earlier, or I'm already beyond 5 years. So this old house is protected from the nursing home. Is the new house going to be protected from the nursing home? And if you follow the procedure I just walked you through for buying and selling it, the new house will be just as protected as the old house. It will not reset the 5-year waiting period simply because you did not put anything new in. You simply converted what was already in there from one investment to another. And so this explains to you how flexible these irrevocable trusts really are.
Mr. Lutsky, thank you so much for joining us today. We appreciate it.
Always a pleasure.
This has been Ask Todd on the Financial Exchange Radio Network. Ask Todd with Todd Lutsky has been presented by Cushing & Dolan, serving Massachusetts and New England for more than 30 years, helping families with estate and tax planning, Medicaid planning, and probate law. Call 800-393-4001 or visit CushingDolan.com. The views expressed in this segment are solely those of Cushing & Dolan. Armstrong Advisory does not provide any legal or tax advice. Please consult with your legal or tax advisor on such matters. Cushing & Armstrong do not endorse each other and are not affiliated.
Still more to come as we get towards hour 2, including we're talking SpaceX and their continued push into artificial intelligence. We're talking home construction and whether there's anything changing on that side of things. We're also going to be talking about State Farm. They rolled out some proposals for new agent contracts and some AI uses within their business. Talk about it in the context of what other companies might attempt to do on that side of things as well. Quick break, but we got hour 2 coming up in just a bit.
I was 24 when I had a stroke.
I was 35 when I suffered a heart attack.
I was 46.
I was 62.
It's a fact. Cardiovascular disease is the leading cause of death in women.
But we can fight against our #1 killer.
Talk to your doctor about your risk factors.
Know your family history.
Learn the warning signs and symptoms.
Together,
let's go red for women.
Visit GoRedForWomen.org to learn more.
Let's talk LDL. AKA bad cholesterol. The higher your LDL cholesterol, the higher your risk of a heart attack or stroke. Your health matters. Know your number. Talk to your doctor and get your cholesterol checked. And learn how to help lower your LDL bad cholesterol. Because your health is in your hands. Find out more at heart.org/LDL.
Without the right estate plan, your family could face unnecessary costs in the future. The right trust may help your loved ones avoid probate and better protect family assets. Get Cushing & Dolan's new guide called Demystifying the Top 8 Estate Planning Trusts by calling 866-848-5699. That's 866-848-5699. Or request it online at LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts has helped me and countless others adjust to civilian life through a variety of incredible programs. Through our local Veterans Assistance Program, we provide necessary services to veterans and their communities, such as food shopping, landscaping, and companionship, but we need your support. You can help by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
In a heartbeat, you could be the difference.
Mark collapsed from cardiac arrest.
9 out of 10 people who suffer cardiac arrest outside the hospital don't survive.
It took 30 minutes of chest compressions to finally feel a pulse.
Most of the time, it's because no one nearby performs CPR. But together, we can change that. Extraordinary things happen when people take action. A small step, a simple skill, a life-saving moment. HeartWalk brings communities together to create health and hope for every heartbeat. Every walker who joins HeartWalk, every dollar donated, means more people trained in CPR, more research, and more life-saving moments for everyone. Take the first step and register for your local Heart Walk. Extraordinary starts with you. Join Heart Walk today. Find your local Heart Walk at heartwalk.org.
This is the Money Matters Radio Network, WBNW 1120 AM and W275 CM FM, Concord, Boston. The Money Matters Radio Network. Every mile can make a difference for a Massachusetts veteran. The DAV 5K Boston returns to Castle Island on Saturday, November 7th for a family-friendly day of community, remembrance, and support. Whether you run the 5K, join the 1 mile walk, or make a donation, your participation helps further the mission of the Disabled American Veterans Department of Massachusetts. Honor those who served. Sign up today at dav5k.boston. That's dav5k.boston.
Our Senators Edward Markey and Elizabeth Warren and Representative Jake Auchincloss are standing up for radio listeners like us by supporting legislation to keep AM radio in cars. They know the value of local radio in times of emergency. Now it's time for Congress to finish the job and pass the AM Radio for Every Vehicle Act. Learn more at dependonam.com. This message furnished by the National Association of Broadcasters and this station.
A trust can do a lot more than simply pass assets to your family. Certain trusts may help keep your estate out of probate, protect assets for your children, and in some cases, even help reduce estate tax liability. Cushing & Dolan has created a new guide called Demystifying the Top Estate Planning Trusts. It breaks down some of the most commonly used trusts in estate planning, including trusts designed to help families plan for long-term care, protect beneficiaries with special needs, and help keep life insurance proceeds outside of a taxable estate. You'll also learn why simply having a trust isn't enough, because if it isn't properly funded, it may not accomplish the goals you expect. To get your free copy, call Cushing & Dolan today at 866-848-5699. That's 866-848-5699, or request the guide online at LegalExchangeShow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts has helped me and countless others adjust to civilian life through a variety of incredible programs. Through our local Veterans Assistance Program, we provide necessary services to veterans and their communities, such as food shopping, landscaping, and companionship, but we need your support. You can help by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
9 out of 10 people who suffer cardiac arrest outside the hospital don't survive. Most of the time, it's because no one nearby performs CPR. Every walker who joins Heart Walk means more people trained in CPR, more research, and more life-saving moments for everyone. Take the first step and register for your local Heart Walk. Extraordinary starts with you. Find your local Heart Walk at heartwalk.org.
Hi, this is Chuck and Mike from the Armstrong Advisory Group. We've got a guide available this month on required minimum distributions. And, Mike, I want to talk about common mistakes that we see. Sure. Let's start first. People not understanding the difference between inherited and non-inherited IRAs.
Yeah, so if you've ever inherited an account that is retirement in nature, you've dealt with these complicated rules. And to make it more complicated, the rules have changed over the last several years. But suffice to say, unless you meet some very specific scenarios, in most cases, if you inherited an account from a non-spouse, then you're going to have 10 years to empty that account, pay any of the taxes that are due on it, and move along. But in addition, there are annual required minimum distributions, and it is very complicated.
What about a situation where someone tries to delay taking their RMD? What kind of problems can you run into there?
Well, one, if you delay your first year RMD, then you're going to have to take 2 in the same year, and that can really add to the tax burden. But more generally, if you just wait to deal with your future RMDs until you're 73 or 75 years old, you just have fewer options. It's going to bump up your income. income, you may end up paying higher taxes. You may end up paying higher Medicare premiums. Your Social Security could become more taxable. So it pays to plan early when it comes to RMDs.
Our guide this month is titled Understanding RMDs, and there are two different ways you can request it. The first, you can go to armstrongadvisory.com and request it there. The second, call 800-393-4001. That number again is 800-393-4001, or request it at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong Advisory and the advertisers heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Chuck Zodda and Paul Lane. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. This is the Financial Exchange with Chuck Zodda and Paul Lane.
Chuck, Paul, Tucker with you here, and we've got not really too much happening in markets this morning. Not surprising, you got a Fed meeting this afternoon, morning of a Fed meeting. Generally, things are pretty quiet in anticipation. So it's Kevin Warsh's first meeting. All eyes are going to be trained on him this afternoon, and we'll see exactly what we hear from him as far as any potential changes that he wants to put in place at the Fed in the near future. Markets, as I mentioned, not really doing too much of anything. The S&P is down 5 points. Again, like, who cares? The Dow Jones Industrial Average is up 119, about 0.25%, and the NASDAQ Composite down 61 points, about 0.25%. So just mixed, relatively quiet markets. Russell 2000 is up about 0.5%. Again, like, not much going on. 10-year Treasury, not much going on there either. Up 1.1 basis points to 4.439%. Dollar index up 0.19% to 99.47. And gold is up 11.40 an ounce to 43.65. Crude oil rebounding today after significant declines the last 3 or 4 days. Up about $1.76 a barrel to 77.81 on West Texas Intermediate. AAA national average for gas prices continuing to slide down another 1.9 cents overnight to 4.02 and 5/10. Probably getting under $4 on the national average this weekend, if not tomorrow. And we've got room for those to run down into that probably 360 to 370 range based on where oil prices have moved to. So another little dip, another meaningful dip coming for gas prices over the next week or two, assuming that we hold in this range on crude. And yeah, that's basically all that I wanted to go through in markets. So I'm glad that we did that, and that was fun. We should do it again the same time tomorrow. What we're going to do right now, though, is talk a little bit about SpaceX. They made an acquisition yesterday. They are looking to buy Cursor, who is a startup out of San Francisco. They're going to be spending $60 billion, so it's not really a startup. It's a company that's been around for a few years. And they are a platform that basically provides ways to handle autonomous coding agents. And so it really is SpaceX saying, okay, we want to get into the AI business more heavily. And I think ultimately this is, pointing to the fact that even though SpaceX has the name space in its name, it's clear that when you look at what's actually under the hood, Elon Musk is trying to build the company in a direction where, yes, they clearly have their launches that they do for, mostly Starlink launches, but also some government satellite work. But it's clear to me that Musk wants to build the company into an AI powerhouse and are acquiring Cursor based on the fact that, hey, our stock is worth, $2.9 trillion. Sure, we can do an all-stock deal for $60 billion, given how we're valued right now.
Yeah, when they, in the SpaceX S1, they had attributed a potential market share or a potential addressable market of something like $29 trillion. Of that, forget that number for a second, but of that, I believe 70 to 80% of it, or maybe more, was going to be addressable through AI and artificial intelligence endeavors. So to further your point, a significant percentage of what they think is going to be their future for growth is within AI. In terms of the big AI players out there, Musk has candidly said in front of, I believe it was a Congress testimony, where he ranked XAI number 5 in terms of the large language models out there. So there, XAI has the Grok chatbot, and you've got Anthropic, and you've got OpenAI, and you've got Google, and he referenced Chinese open source models that sort of take the lead in the top 4 ahead of XAI. SpaceX bought XAI for $250 billion, which was a significant premium to what revenue that XAI does. And so that is where we sit at this point with this acquisition of Cursor, which will add some revenue to SpaceX in terms of what Cursor does. They're up to an annualized revenue rate of about $4 billion a year. They've got some steep competition, though, in this autonomous coding space. Anthropic has a product. OpenAI has one, too. They're playing against some partners that are playing against some other competitors that have a lot of money to burn, and sort of, absorbing Cursor into XAI and SpaceX. Clearly, Musk pointing to that they're going to continue to spend a lot on AI here.
Yeah, I don't know anything in terms of, hey, is this going to be great because Cursor is this great platform? I don't know if there's other ones that are going to be able to replicate what they do. I'm not involved enough in the technology to be able to tell you yes, this is best of breed, or hey, this is. I don't know. But I do think, hey, if you have a stock that you think is valued highly, the two best things that you can typically do with it are A, use that stock to go and buy other companies, or B, issue more stock in order to give yourself more of a cash cushion in the future. And so Musk clearly saying, yeah, I got a company worth almost $3 trillion. Why wouldn't I spend it on this? Because, hey, if this company that I'm buying ends up working out to be, just what we need, great, we've secured it and helped our valuation in the future in terms of being able to grow into what we're worth now. And, not really surprising there. So this is another one of the reasons why when you talk about, SpaceX and its valuation, yes, if they just kept, running their business like they were last year, of course it looks crazy. They're trading, 150 times revenue right now, and revenue's only growing, 30, 35% a year. You had a company like this, like Cursor, that's on pace to do, another $4 billion in revenue this year and might be scaling up quickly. And again, it doesn't really make, SpaceX stock look cheap. I'm not saying that. But you have to think about this in terms of, hey, how can the company evolve in different ways to potentially grow into that valuation, even though it looks nutty right now?
Yeah, you've seen that with the deals that they've struck with Anthropic and Google, where they're leasing out computing capacity from their Colossus data center in Memphis. That should add another $3 billion or so a month in terms of revenue. But those contracts are short term, so not something that can be projected out further. But they may be acquiring another company as well, as mentioned in this Bloomberg piece here.
Yeah, the question that just can't be put to bed is, hey, at some point will SpaceX and Tesla attempt to merge? And again, if they did at their current pricing, you'd basically have one of the two most valuable companies on the planet. If they got there, the other one being NVIDIA, but. The rumors won't go away because Musk obviously owns both of these companies. The list of car companies that have been able to maintain any kind of valuation like Tesla for an extended period of time starts and ends with Tesla. And so by incorporating them all under one roof, then you basically can just have everything operating, in what would potentially be a more streamlined fashion. You could potentially have the capital-intensive auto business being subsidized by, an AI or software business if that ends up becoming profitable. And so, the one that I come back to that it looks similar to actually is Amazon, just because Amazon, you've got this retail business that doesn't really make a lot of money.
Subsidized by the cloud.
But it's subsidized by AWS.
Yeah.
And this could look kind of similar in that you've got this car business that might not make a ton of money long term, but if you've got a reliable tech business spinning off big margins, it could. The question is, are there going to be big margins long-term in AI, which is something that we just don't know right now?
Yeah, this was a fascinating piece. Liam Denning from Bloomberg has been covering this subject for a bit in terms of the SpaceX and Tesla merger. It also would give Musk more control of the combined entity, where he has about 84% of SpaceX voting shares and about 20% on Tesla's side of things. And so combining the two entities would give him larger voting control. You mentioned the idea of cross-subsidization, being able to basically subsidize some of the endeavors. And Tesla, ever more so, if you listen to their earnings calls, is being more positioned as a artificial intelligence and robotics company and less so a car company. And so that melds with this idea of what we just talked about previously with SpaceX.
Let's take a quick break. When we return, we've got trivia next.
From markets to money to business and financial news, watch the Financial Exchange every day on YouTube. Hit that subscribe button and keep up to date on the market news you need to know. This is the Financial Exchange. Without the right estate plan, your family could face unnecessary costs in the future. The right trust may help your loved ones avoid probate and better protect family assets. Get Cushing & Dolan's new guide called Demystifying the Top 8 Estate Planning Trusts by calling 866-848-5699. That's 866-848-5699. Or request it online at legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. For veterans, every day is a commitment to service. This Veterans Day weekend, be part of something meaningful at the DAV 5K Boston. Join the thousands of runners and walkers at Fort Independence on Castle Island for a day of community, remembrance, and gratitude. Proceeds help fund the programs and services provided by the Disabled American Veterans Department of Massachusetts. To register or make a donation, please visit dav5k.boston. That's dav5k.boston.
Hi, this is Chuck from the Armstrong Advisory Group. Our new guide, Understanding RMDs, explains why required minimum distributions are about more than just withdrawing money from a retirement account. The rules can get complicated fast. An inherited IRA opens up an entirely new set of deadlines with rules to follow, and mistakes can be costly. The IRS can impose a penalty of up to 25% of the amount that should have been distributed. But there also may be opportunities to plan ahead. The guide covers strategies like qualified charitable distributions, reinvesting RMDs, and ways to help manage future tax exposure. To request your free copy, call us today at 800-393-4001. That's 800-393-4001, or request the guide at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
In a heartbeat, you could be the difference.
Mark collapsed from cardiac arrest.
9 out of 10 people who suffer cardiac arrest outside the hospital don't survive.
It took 30 minutes of chest compressions to finally feel a pulse.
Most of the time, it's because no one nearby performs CPR. But together, we can change that. Extraordinary things happen when people take action. A small step, a simple skill, a life-saving moment. HeartWalk brings communities together to create health and hope for every heartbeat. Every walker who joins HeartWalk, every dollar donated, means more people trained in CPR, more research, and more life-saving moments for everyone. Take the first step and register for your local HeartWalk. Extraordinary starts with you. Join HeartWalk today. Find your local HeartWalk at heartwalk.org.
Sometimes we know what's next. Other times, it's impossible to know. Life can change in an instant. Don't be caught standing by the next time someone's heart stops. Knowing CPR gives you the ability to act and takes you from bystander to lifesaver. CPR is a life-saving skill. Join the nation of lifesavers today by learning CPR at heart.org/nation. National support for CPR education provided by Elevance Health Foundation.
Here at the Massachusetts Department of Elementary and Secondary Education, we are committed to all students not only attending, but succeeding at school. Your presence is powerful. Share why you attend at doe.mass.edu.
Sponsored by the Massachusetts Department of Elementary and Secondary Education.
Markets move fast. Follow the Financial Exchange live on X so you never miss a story. This is the Financial Exchange Radio Network.
The Financial Exchange is incredibly proud to be a partner of the Disabled American Veterans Department of Massachusetts. Hundreds of runners have already registered for this year's DAV 5K, and the event is on pace to sell out in record time. So head to dav5k.boston for all the information about how you can participate this November or make a donation to support our great American heroes. Your gifts help fund free rides to medical appointments for veterans and the nation's first DAV-led housing initiative, providing homes for single veterans and veteran families. Go to dav5k.boston and make your donation today. That's dav5k.boston. Time for trivia here on the Financial Exchange. And on this day in 1856, the Republican Party held its first national convention. 4 years later, the nation elected its first Republican president. Trivia question today: who is the first Republican to serve as U.S. president? Once again, who is the first Republican to serve as U.S. president? Be the fourth person to text us at 617-362-1385 with the correct answer, along with keyword trivia, and you win a Financial Exchange Show t-shirt. Once again, the fourth correct response to text us to the number 617-362-1385 with the correct answer, along with keyword trivia, will win that t-shirt. See complete contest rules at financialexchangeshow.com.
Paul, we got a piece here from TechCrunch, and to those of you who that's not a familiar publication to you, TechCrunch has been around for, I don't know, at least 25 years now. And basically, if you want to know anything as it relates to what's going on in the world of tech startups, like, it's generally a pretty good place to be informed of the news. So, very reputable source. Unfortunately, the piece that they have here sucks. It's titled, "The AI Layoff Wave is Becoming a Powder Keg." And here's the thing that we have. I'll quote here. "Something strange is happening in tech right now. Companies are posting record profits and revenue while laying off tens of thousands of people, citing AI as the official explanation. So far this year, there have been layoffs affecting nearly 150,000 people, a pace of 974 people per day, 44% faster than last year, according to TrueUp, a tech job board and recruiting platform." So pretty much TechCrunch is laying out the case that they make, through here, saying, hey, you're going to just see this wave of layoffs that happens throughout tech, and no one's going to have a tech job ever again. The problem with this is that when you actually go and look at the data as it relates to job openings in the tech space, job openings, this is from the JOLTS report, it's from Indeed, it's multiple data sources telling us the same thing. Software and tech company, not company jobs, but software and tech jobs, again, they can be at tech companies or not, are actually seeing increased postings over the last 4 to 5 months. And it gets at something that Mike Armstrong and I have talked about quite a bit over the last, year or so, which is companies overhired a ton in 2021 and 22. Mm-hmm. And not only did they overhire on headcount, they had to spend a boatload to bring people on them because it was so competitive. Remember, that was when Walmart was paying truckers like $150,000 a year because everyone had a job and there was just no way to hire someone then. So the place that I go on this is no, this isn't like some Armageddon that's heading for labor markets, specifically even tech labor markets. The data is telling us that workers that were hired 4 to 5 years ago are being laid off because they're too expensive, and companies want to bring on cheaper people right out of college in order to manage their cost structure better.
Yeah, you have an imbalance where there are eager workers coming right out of college that will probably be more cost effective than seasoned professionals would be in the tech sector that were hired back then. And I do feel like, the piece here does kind of the classic trope of creating the broad brush between, oh, it's just Zuckerberg and some of these other people that are sitting in their, billionaire bunker caves that are making all the money here, and everyone else is experiencing a significant amount of layoffs. And the truth is always more nuanced than that. And you made that point with the availability and the tech sector jobs that are out there. It just seems like kind of low-hanging fruit to write this piece of creating that contrast between the concentration of wealth of the ultra high net worth individuals out there that are behind these companies versus the tech workers, where the truth is probably somewhere in the middle.
Now, if you want to tell me, hey, it feels like an awful time to be a tech worker because layoffs are happening a lot and morale's bad because of fear. Like, I'm not saying this is like, oh, like you should just feel great about, working in tech. But what I am telling you is tech companies wouldn't be posting job postings in the numbers they're posting right now if they didn't want to actually hire.
It just could be a shift of what they're looking for, right? I mean, obviously, Software has been scrutinized a lot during all these developments with AI and computer programmers and things like that. Those are areas, coding, that are under pressure, but I still feel as if there's tremendous amount of demand for engineers out there that maybe they're just deployed differently. But it is going through a shakeup. I'm not questioning that at all, but perhaps being painted as a little too pessimistic here in this piece.
I do want to, while we're on the topic of AI, Pew Research just put out, this was today actually, this morning, their survey on Americans and their AI usage. They asked Americans, have you ever used an artificial intelligence chatbot like ChatGPT, Gemini, or Copilot? When they asked Americans this in 2024, 33% of Americans said yes, and 66% said no.
Okay.
Today, it's basically a 50-50 split. So
I was going to guess 60 or 70%. Okay.
No, this is the thing that we got to remember. Half of Americans have never used an AI program. Like it still is something where there is not broad penetration throughout all of America. It's not like using the internet or social media or stuff like that. And I think
it wouldn't feel like a big jump to use the search engines or like the models. It just doesn't feel like that different from Google.
They then asked, okay, what are the reasons why you've used these? 42% saying to search for information. Makes sense. 38% for tasks at work. 25% for fun or entertainment. 24% to create or edit images or videos. 20% to get medical advice. 20% to get diet and fitness information. 13% to get news. 10% for emotional support or advice, and 4% for companionship. So again, I just find it interesting, kind of what the usage is. The other piece is, hey, how frequently are you using it? So remember, 51% doesn't use it at all. 25% said several times a week or less. 8% said about once a day. 12% said several times a day, and 4% said almost constantly. So of the ones who use it, the vast majority, about 70% of the people who use it, are using it a few times a week or maybe once a day. Again, not broad, like, overarching penetration here. So I think it's interesting just to get the data and see, okay, like, what's the actual usage like right now? And this is also why I continue to say, hey, regardless of whether you like it, hate it, or are indifferent about it, we're going to be using way more AI 5 years in the future. And it's because there still are a ton of Americans who don't use it at all or very much. Quick break. When we come back, we got the trivia answer in Wall Street Watch.
Bringing the latest financial news straight to your radio every day. It's the Financial Exchange on the Financial Exchange Radio Network.
Is it a stroke?
Even if you're not sure, act fast and call 911. Signs can include face drooping on one side, arm weakness, speech difficulty, or not making sense when talking. Time is critical. A stroke requires immediate medical care, which starts as soon as the ambulance arrives. So if you see any sign of stroke, act fast and call 911. Visit mass.gov/stroke, sponsored by the Massachusetts Department of Public Health.
Our Senators Edward Markey and Elizabeth Warren and Representative James McGovern are standing up for radio listeners like us by supporting legislation to keep AM radio in cars. They know the value of local radio in times of emergency. Now it's time for Congress to finish the job and pass the AM Radio for Every Vehicle Act. Learn more at dependonam.com. This message furnished by the National Association of Broadcasters and this station.
Hi, this is Mike Armstrong from the Armstrong Advisory Group. As you age, the IRS stops asking you to save for retirement and starts insisting that you take money out. Those withdrawals are called required minimum distributions, and if you don't take enough, you could face a penalty of up to 25% of the amount you were supposed to withdraw. If you wait too long to take the first distribution, you could end up with 2 taxable withdrawals in the same year, which might push you into a higher tax bracket or increase your Medicare premiums. Our new guide, Understanding RMDs, covers this issue and others to help you prepare for this important retirement deadline. Get yours today by calling 800-393-4001. That number again is 800-393-4001, or you can request the guide from our website, armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
In a heartbeat, you could be the difference.
Mark collapsed from cardiac arrest.
9 out of 10 people who suffer cardiac arrest outside the hospital don't survive.
It took 30 minutes of chest compressions to finally feel a pulse.
Most of the time, it's because no one nearby performs CPR. But together, we can change that. Extraordinary things happen when people take action. A small step, a simple skill, a life-saving moment. HeartWalk brings communities together to create health and hope for every heartbeat. Every walker who joins HeartWalk, every dollar donated, means more people trained in CPR, more research, and more life-saving moments for everyone. Take the first step and register for your local HeartWalk. Extraordinary starts with you. Join HeartWalk today. Find your local HeartWalk at heartwalk.org.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke from the law firm of Cushing & Dolan with your Financial Exchange quick tip of the day. And today, we're talking about your new guide, Todd, Demystifying the Top 7 Estate Planning Trusts. Now, do you lose control if you transfer your assets to an irrevocable trust in order to protect them from long-term care expenses?
Well, you know, that's great when you mention that irrevocable trust, but limit it to the kind of trust where you're protecting it from the cost of long-term care. Because as the guide says, there's 7 different kinds of trusts that we're trying to demystify. And there's also many kinds of irrevocable trusts out there, not just one type. So many people think there's just one type. But this particular type, where you're trying to protect it from the cost of long-term care expenses, the answer is no. You do not lose control over your assets. There's a whole spectrum of control with irrevocable trusts. And this one, you keep about 95% control. Like, you can live in your house, you can sell your house, you can buy another house, you can invest your money, you can manage your money, you can collect the income. Even the tax liability of these trusts are designed to be at your own rate. In other words, they are grantor trusts. You don't even pay any higher income taxes when you have this irrevocable trust. So this kind of trust, folks, you keep control and you protect your assets from the cost of long-term care.
Call right now for your free copy of Cushing & Dolan's comprehensive guide titled Demystifying the Top 7 Estate Planning Trusts. It will help you determine what type of trust is right for you and your family. Call 866-848-5699. That's 866-848-5699. Or you can request it from LegalExchangeShow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Armstrong do not endorse each other and are not affiliated. for Wall Street Watch, tracking the stocks, the data, and the headlines driving markets so far today, right here on the Financial Exchange Radio Network.
Fed Day is upon us, and markets are mostly quiet as investors await the conclusion to Kevin Warsh's first Fed meeting as Fed chair, with the press conference beginning at 2:30 from Kevin. Right now, the Dow is up about 0.5%, S&P 500 edging only 5 points higher, NASDAQ dipping by 13 points. Russell 2000 is up 0.8%, 10-year Treasury yield is flat at 4.43%, and oil up 1%, trading right around $77 a barrel. The SpaceX rally has hit the brakes today after 3 straight days of gains since its IPO. Right now, SpaceX shares are down by 5%. Sticking with the space sector, where AST Space Mobile said it successfully launched into orbit 3 new satellites that will continue to build its cellular broadband network in space. That stock up by 2%. Meanwhile, CarMax dropping 7%, despite the car retailer posting an earnings and revenue beat in the first quarter. Elsewhere, shares in Lionsgate Studios are retreating 6% after streaming giant Netflix denied reports that it is interested in acquiring the media company. Lionsgate rallied yesterday by 14% amid the speculation. And Snapchat parent company Snap is seeing its stock fall almost 5% following yesterday's product announcement of its new augmented reality specs that retails for $2,195. I'm Tucker Silva, and that is Wall Street Watch.
Joining us now in the studio from Armstrong Advisory Group is Susan Powers. And Susan, great to have you here today.
Thanks. It's been a hot minute since I've been in the big studio.
When's the last time you were in here, do you
11
think?
years ago. 11 years ago when we used to ping pong financial exchange with Barry.
It's a long time.
Mm-hmm. It is.
Do you know what a gingerbread man puts on his bed? Cookie sheets. Yeah, cookie sheets.
Cute.
Susan, I want to talk to you a little bit about Social Security in terms of filing for it.
Mm-hmm.
A lot of different, reading out there and things like that people do. But what are the main considerations that people need to look at in order to make the right filing decision for their situation?
So really confusing for a lot of people. There are more than 2,700 rules when it comes to Social Security. So not only the rules, but looking at your own financial situation, you have to look at, I would say first and foremost, ask your doctor. How do you look? What kind of health are you in? Are you single? If you're in poor health, you may want to claim it early. If you're married and in poor health, you may want to claim it later so that your spouse has a larger survivor benefit. Do you have assets that can kind of bridge the way until, if you say, all right, well, I'm not going to claim it when I retire at, let's say, 65. I'm going to wait until 70. Do you have other assets that you can rely on to say, okay, where's my income going to come from? Overall, I think when you look at kind of a break even, that people try to do straight math to say, okay, if I claim at 62, I'm going to have this many dollars and I'll break even about 12 years after my full retirement age around 69. Well, that's great if you're looking at Social Security in a vacuum to say these are the dollars I would receive, but you're also depleting your assets at the same time if you're waiting. Then you've got the folks that say, well, I'm going to claim it at 62 and I'll just invest the funds. Invariably, no one ends up investing all of the funds.
Sure.
And you think about every year you wait to claim Social Security, you're getting a 7 to 8% increase plus the cost of living increase. So if you're waiting, you could be getting, we're at what, 5.9 or so last year. So you could be getting, 16, 15, 14%, depending on what the cost of living increase is each year.
When we look at the strategies for married couples, I know there aren't as many as there used to be. I know, 10, 15 years ago, there was all kinds of stuff that you could do.
Lots of fun stuff.
But there still is some fun stuff that married couples can do in trying to claim?
Yeah, there are. And so there are some folks that, the lower earning spouse might claim at 62 because when their spouse starts claiming at their full retirement age, they'll qualify for half of their spouse's benefits. So they'll get a raise at that point. And then when their spouse, if they their spouse predeceases them, then they're going to get a step up after that point. So really looking at where it makes the most sense. It may not be for both of you to claim early, or both of you to claim at full retirement age, or both of you to claim at 70. If you're going to get a spousal benefit and that's greater than your own, there's no delayed retirement credit on that. So don't file that any later than your full retirement age, if that's 67 or 66 in a couple of months or so. So really looking at the way to optimize what you're going to get.
One more question as it relates to couples in their filing.
Mm-hmm.
Let's say that unfortunately a spouse has passed away recently. What are the different ways that can affect how benefits, accrue to a family then?
Yeah, so you can claim a survivor benefit as early as age 50 if you're disabled, or at 60. You are going to be subject to an earnings test, same way you are if you're claiming your own benefit before your full retirement age. You can only make up to around 24,480 is the amount you can make before retirement age. So you can claim that benefit, but you actually get some other strategies as a result of it, of the survivor benefit, because you can claim your own benefit early and then switch to a survivor benefit at 70, or the vice versa. You can claim a survivor benefit, let your own benefit grow until 70, and switch after that point. So lots of things to consider when you're trying to determine when to claim.
Folks, as Susan mentioned, there are over 2,700?
2,700 rules.
2,700 rules as it relates to Social Security. The bad news is that she can't cover all of them right now. The good news is that she is putting on a retirement planning seminar with a focus on Social Security and Medicare Essentials on June 25th at 5 p.m. at the Marriott Hotel in Quincy, Massachusetts. Again, it's Thursday, June 25th at 5 p.m., and Susan will be going through all kinds of Social Security details. She's going to be joined there by Effie Vasoulis, who is going to be discussing Medicare planning strategies as well. And so it's kind of a one-stop shop to learn a ton of information about Social Security and Medicare. Two ways that you can sign up for that event. Number one, you can go to armstrongadvisory.com/events and sign up for it right there. Number two, you can call 800-393-4001 and get your registration done right over the phone. Again, that website is armstrongadvisory.com/events, or you can call 800-393-4001. One more time, it is on June 25th at 5 p.m. at the Marriott in Quincy, Massachusetts. 800-393-4001. Susan, thank you so much for joining us.
Thank you for having me.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
We're going to take a quick break here. When we return, we're going to do a little bit of stack roulette.
The Financial Exchange is now available every day from 11 to noon on SiriusXM's Business Radio Channel 132. Stay informed about the latest from Wall Street, fiscal policy, and breaking business news every day. The Financial Exchange is live on SiriusXM's Business Radio Channel 132. This is the Financial Exchange Radio Network.
This is Susan Powers from the Armstrong Advisory Group. When it comes to Social Security and Medicare, the decisions you make today can have a lasting impact on your retirement. There are key choices to consider, like when to claim, how spousal and survivor options work, and whether your Medicare coverage is aligned with your needs. Without a clear strategy, it's easy to overlook how taxes, income, and healthcare costs all connect. Join us for a complimentary educational seminar on Thursday, June 25th at 5 p.m. at the Marriott in Quincy. We'll help you understand your options and the decisions that come with them. That's Thursday, June 25th at 5 p.m. at the Marriott in Quincy. Reserve your seat today by calling 800-393-4001. That's 800-393-4001, or register online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Estate planning isn't just about writing a will. The right trust can help your family avoid probate, protect your home, reduce estate taxes, and even help shield assets from the cost of long-term care. That's why Cushing & Dolan created a new guide called Demystifying the Top 8 Estate Planning Trusts. Inside, you'll learn the difference between revocable and irrevocable trusts, why some trusts are designed to protect assets from a nursing home, and how certain trusts can keep your family's affairs private. The guide also explains some of the biggest mistakes families make, including creating trusts but never properly funding them. If you've been putting off estate planning, this guide is a great place to start. Call Cushing & Dolan today at 866-848-5699 to get your free copy. That's 866-848-5699 or request it online at legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
As a busy mom to 4 kids, my to-do list is full.
Trying to fit in exercise, eating right, and prioritizing self-care can feel next to impossible.
While we can't add more hours to the day, we do have a great resource to help.
Go Red for Women has easy tips, tools, and information to help you and your family live a healthier life.
So to all the moms, the aunts, the grandmothers, and amazing women out there doing it all,
visit goredforwomen.org/momlife today.
You take care of them, Go Red for Women will take care of you.
Our Senators Edward Markey and Elizabeth Warren and Representative Ayanna Pressley are standing up for radio listeners like us by supporting legislation to keep AM radio in cars. They know the value of local radio in times of emergency. Now it's time for Congress to finish the job and pass the AM Radio for Every Vehicle Act. Learn more at dependonam.com. This message furnished by the National Association of Broadcasters and this station.
Sometimes we know what's next. Other times, it's impossible to know. Life can change in an instant. Don't be caught standing by the next time someone's heart stops. Knowing CPR gives you the ability to act and takes you from bystander to lifesaver. CPR is a life-saving skill. Join the nation of lifesavers today by learning CPR at heart.org/nation. National support for CPR education provided by Elevance Health Foundation.
Smart financial talk whenever you want. Find the Financial Exchange on YouTube. Hit that subscribe button and keep up to date on daily business news from New England and around the country. This is the Financial Exchange Radio Network.
Oh, before we get to Stack Roulette, we got to pay off the trivia question that we asked a couple segments ago, which was, who was the first Republican to serve as U.S. president? That would be Abraham Lincoln. And Stephen in Middleton, New Hampshire is our winner today, taking on the Financial Exchange Show t-shirt. Congrats to Stephen. And we play trivia every day here on the Financial Exchange. See complete contest rules at financialexchangeshow.com.
Paul, what do you got for me for Stack Roulette?
I want to talk about the housing market a little bit. We got some new information that new construction has sunk to a 6-year low in terms of the sales of new construction homes. We saw that a real low number. There's a significant backlog of inventory, about 500,000 homes that remain. Again, these are new construction homes that remain unsold. That's a 19-year high. And at the current sales pace we are at, it would take about 9.5 months to clear that inventory. And so the housing market finds itself, again, in an interesting spot where we haven't seen a tremendous amount of growth for the housing sector in general. There was some optimism heading into this year that interest rates may come down a little bit, but we still sit about 6.5% on the 30-year fixed mortgage, and you've got a lot of these builders having to offer discounts to potentially unload some of the new homes that they had built. About 35% of builders, according to the National Association of Home Builders, as of May, were offering discounts on those new homes. So interesting to see what will happen with the housing market heading into 27 as we're kind of in the rearview mirror of the spring housing market here.
I am not buying this housing report.
Okay, how so? Or why? What are you not buying?
None of the surrounding data makes any sense. There's no reason why construction would have just suddenly collapsed last month. Permits the previous, several months were just fine, around 1.4 million annualized.
Mm-hmm.
The trend in construction over the last 6 months or so was, flat, but with a modest, upward move to it. And there's nothing out there that would suggest that builders en masse decided, hey, we're not going to build new homes to the tune of like 15 to 20% fewer than we were building previously. So I am going with weird data fluke for some reason on this, but unlikely to be repeated. If it is repeated for whatever reason when we receive the June data, then there's something very strange going on as it relates to housing. But otherwise, what we've been seeing for the last, not 6 months, last 3 to 4 months, the markets where most of the construction happens, Florida, the Carolinas, Georgia, Arizona, like the places where you can do 10,000 unit developments, not Massachusetts where, we live, where it's like, hey, we're doing a big development. How many units? 16. Whoa. No, places where they really build housing. Those markets have started to stabilize in terms of pricing and demand. Pricing fell for, the last couple of years in a lot of those places, and now has found a level where it's matched with demand, and so builders are starting to come back to those markets. I don't know why you would suddenly see a big drop-off in construction in May. People would say, oh, well, because what about the, conflict in the Middle East? Okay, well, that started at the end of February. Why'd they wait 2 months? And so they went through March and said, no, we're not going to do anything. They went through April and said, no, we're not going to change plans. And then in May they said, yes, now we're going to construct fewer. No, that doesn't make any sense to me either. So I'm going with fluke report. And Tucker, if you want to put this one on the prediction wall, when we get next month's report, I will say that it recovers back north of 1.3 million annualized. So I will put my Post-it where my mouth is.
Okay.
That's right.
Put me down for the red tie on Kevin Warsh if you want to throw a...
So you got red tie, I got gold tie, Tucker's got no tie at all.
Okay, that's a whole new Post-it. Hold on a second.
Well, yeah, I mean, that's a quick
I
payoff.
I don't think we need a Post-it for that one.
Right.
We'll
say Paul was red, Chuck was what?
Gold.
Gold, okay.
Yes.
And you were no tie.
No tie.
Cash.
Kev.
And I texted Mike, and he said tuxedo T-shirt. So...
No, Mike said...
I don't know.
Oh, yes. Thank you, Michael. I appreciate you. Let's talk a little bit about this piece from the Wall Street Journal. State Farm's AI plan for sales agents sparks uproar. Quote, a real slap in the face.
Jake from State Farm not part of this diabolical move here.
Well, it's Jake, but spelled with AI, not A. So it's Jake from State Farm. So here's the deal. Is the State Farm CEO pretty much said, okay, we've got to, figure out, ways to change because they haven't been having, a great last couple of years. And according to a video of this event that, he was, speaking at, he literally said State Farm needs to change. And basically what he wants to do is put more AI into the business. And specifically is talking about ruling out a new contract for agents that is going to cut benefits and encourage agents to consolidate into bigger offices. So less, freedom and autonomy and things along those, lines. Also, agents who don't meet certain new sales targets for 2 years in a row will be paid out lower commissions. And, certain types of commissions are being changed as well. And on top of this, agents are then being asked to incorporate AI into their sales process. So I said, okay, let me read about this and see, what it says. Quote, new tech tools will include digital assistants and AI-powered instant summary of each household's active concerns and tailored product recommendations. The insurer is piloting an AI assistant for customers reporting auto losses, according to an internal State Farm report on takeaways from the Vegas convention. Okay, well, they're not replacing agents with AI. Like, I don't know if your boss came in and said, "Hey, we've got a piece of, this is a copier. We want you to use it to make copies instead of carbon paper." Do you just throw your hands up and go, "Oh, I can't use this"? No, again, it's not like they're replacing people. They just want them to be more productive, which, by the way, I think is exactly what we want AI to do in a perfect world. We want it to not replace us, but allow us to do more. The same way that a carpenter doesn't say, "The only good saw is a hacksaw." No, it's not like how it works. You use the best tool for the job, and if power tools can make you a more efficient carpenter or plumber or whatever, you use them because they allow you to turbocharge your performance. Likewise, the reason why we use computers and not, word processors or abacuses, is it abacuses or abaci?
I was literally about to ask that.
Maybe it's abacuses.
I think that's that. It's definitely that.
Abacusi?
Abacuses.
We'll do some research on that. But the reason that we don't use the abacus in the modern, work in the modern office is because A, the little beads get lost everywhere, and B, the computer is much more efficient. So if AI turns out to be more efficient, we'll use it. If it sucks and is useless for our job, companies will figure that out and they'll be like, "No, this is a waste of money. We're not going to do it."
Ultimately, what this comes back to...
Abacuses.
So not abaci.
Sorry, Paul. Go ahead.
They're cutting these employees' pay, which is never going to make anyone happy.
Right,
if you said to me, "Hey, Paul, we're going to incorporate some new AI tools into our firm here, but we're going to ask you to take a pay cut and use these tools more," I'm not going to be thrilled about that. And what ultimately, whether it's insurance or what we do, is a relationship-driven business. And yes, you want to use tools to make yourself more productive, but on the heels of cutting your pay at the same time doesn't really instill a lot of confidence in your company.
No, but here's the counter. Paul, you probably know a bunch of people in sales in the financial industry.
Yep.
When you talk to them, how many of them say, "Hey, my commission structure is much better this year. It's easier." No, everyone that I talk to is, "Well, they reorganized our department and my sales quotas are higher and, it's
the
harder
easiest
for me."
way to cut down the expense.
That's what I hear from just about everyone in the financial business. So, I don't know. We're going to take a quick break. Markets remain broadly flat in advance of Kevin Warsh's first meeting as Fed chair. We're going to summarize it tomorrow, and you should listen to us do just that.